Happy Sunday morning to you. I have 24 years of technical analysis experience and I'm an institutional trader, and most people know me by D7. Feel free to follow if you'd like. There's a few things I want to look at here. We had a monster bloodbath on Friday. Markets down a whopping 2+%. We have a 3% drop on the NASDAQ. A complete bloodbath after a pop. I want to go into this and look at what we were seeing. This is the daily chart on the S&P 500, the Spider ETF. If you look at this, we have two trend lines drawn. If I go to a line chart, you'll understand these trend lines much better. Pause the video, look at how those were drawn. I'm going to go quick here. We have candlestick reversal patterns, and here's what I'm looking at. We have support here, resistance there, support, resistance here. We came down, and here's the thing that did not happen. We did not hit support again. This is a downtrend, lower swing highs, lower swing lows, with two trend lines that are fairly paralleled with one another. When we failed to hit here, and if you look at this and you zoom in, let's zoom in so you can really see what I'm going to show you here. If you look at this, we're dropping, but look at the lows. Do you see how the lows are starting to round? Do you see the rounding pattern? And then this low actually ticks higher. Do you guys see that? So we did not hit this lower trend line, and we knew that the chances of us not hitting that were pretty good because of that rolling over effect that we were getting. But what ended up happening, we had a monster gap down on Thursday. Big gap down. When that gap down happened, buyers came flooding in, buying that weakness, showing that we have buyers in this area. We come flying back up, closing at this trend line. And then what happened was the very next day, Friday, we gap up. People got excited. If you blow this up more, they bought it up. But then smart money rolled in. And then bought or sold into that strength coming back down. For those of you who follow us on social media, follow us on Facebook, follow us on Instagram, Twitter, LinkedIn, follow us because I post little small videos throughout the week, and I said, guys, don't get too excited about this rally we got on Thursday. So I put it out there. I said people will sell into that. And then Friday I said, sure enough, they sold into that strength. So if you want tidbits throughout the week, certainly follow us on social media. Now, this dropped back down. And now the question is, are we going to continue in this downtrend? Will we continue dropping here? Here's the part I want to be careful with. We still did not hit support. We did not hit that. And the last two trading days were on big volume, big volume. So the bulls came in and said, well, I think this is a bottom. The bears came in and says, no, it's not. We have a massive war taking place in the markets at this moment. And it is between these two camps, the bulls and the bears, to decide which way we're going to go. Now, on the daily chart, we have a bigger argument to the downside still, but it's saying, hey, we're trying. This should be a bottom. We didn't hit support. We gapped down. Buyers came in. We came up to the resistance. We broke resistance at one point on Friday, but then we closed back below. If you go to a line chart, you'll see this. Resistance, and we dropped again. But if I were to draw a line coming across right here, this to this line, okay, now we have a triangle. I want to make sure this is perfect. Okay, now we have a triangle. If we break below this trend line, so that would put us around 356 on the spider. we break below that, you need to be thinking short, not long, okay? But then the question is, will we stay below it, or will we rally back up, giving us a hammer? That could happen. Absolutely could happen. But this is the area that I'm watching for. If we can stay above that, and we get a close above that, and this trend line, the bulls can take control again. So now what I want to do is take a quick look at the weekly. The weekly to see, well, does the weekly spider tell us anything? If you look here, we're down, down, down. We did not hit support. Again, we didn't hit support, but now we're building what's called a low base. We had an inverted hammer down here. And why is that? In the comments, why is that an inverted hammer and not a shooting star? Can anybody tell me? On the weekly chart on the S&P 500, why is that an inverted hammer and not a shooting star? So we have the 200-week moving average coming up, trying to act as some level of support, but we're starting to break that. Look at all the wicks, the upper wicks here, the lower wicks here. We're starting to have a monster fight take place. The MACD is down, 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 but trying to cross over. It's on the low side. It has a better chance of going up than staying lower, but it can still keep going lower. So something that we're watching for. If you look at the RSI, you know, RSI is fairly low also on the relative strength. So the next thing I want to look at is on the monthly. I mean, we're halfway through the month, but what does the monthly spider show us? If you look at the monthly spider, we've been up, 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 and then we drop down, 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 down to the rising moving averages here. You can see it here. This is the 50 coming up right there. Finding support at the rising 50 MA, and we are at the 50% Fibonacci retracement. This is a perfect place to look for buying. If you look at the MACD, we're down, 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 down. Are we ready to bounce? Maybe, maybe not, but we are very low. I mean, RSI extended extremely to the downside. This would be a perfect place to look for buying opportunities on the larger time frame. So isn't this interesting? What I like to quickly do is just see, can I get any ideas of what's happening on the Qs? If I go to the Qs, the same thing is happening on the daily chart. Resistance, and we dropped again. If you go to the Russell's 2000, we got above the trend line, and then we come back down. That could be a jab to the upside. So we could, if this Russell breaks below, say 165, definitely if we get down below 163 areas, watch out below, guys. Bad news. Financials, if you look at financials, we got above a trend line, but Friday we come back down. If it breaks these trend lines down here, that is bad news. So that's something that we're watching for. So let's pay special attention to all this. All right, so I am back in Tampa. And if you have the time during the day, if you want to trade with us, feel free to trade with us in the chat room. We have a chat room. It is free chat room. You guys can come in, be a part of this, and just go to GrokTrade, go to chat room, and join us. It is run by our Grok graduates. You will learn and glean from those individuals who are well trained, people you don't want to be trading against in the markets. I promise you that. So these are Grok graduates who come through our mentorship program. These individuals are in that room for day trading. If you want to day trade soon, we'll get swing trading going for those that still have JOBs. If you have a job, we want to be doing evening chat rooms also for you guys. We're still working out the details on that. But if you are day trading, you have over $25,000 and you're an American, and you're allowed to day trade, okay, in your account. And if that is you and you would like to be part of this room, feel free to join us. Again, it's free of charge. So you'll figure out how to find that on the website when you go there. Hope everybody is well. And the reason, just so you guys know, I said that at the beginning, because I get watching other people who do other trading videos. I don't know if you guys know this or not, but I was doing trading videos before YouTube was around. I was the first person in the world, believe it or not, and you can go to trade2win.com and look for free trading videos and look for DES44, DES44. Look for me. You will see that I was producing trading videos using zip files because there's no other way of doing videos back then. in 2004. YouTube didn't come out until 2005. As far as I know, no other, at least American, probably in the world, or any trader within the world, was producing ongoing, consistent trading videos like I was doing. And they got wildly popular. So if somebody can prove me wrong on that, feel free to do. People have tried in the past and nobody has to this point. But I think I was the first person in the world to be doing trading videos. And here I am, a gazillion years later, still doing them. But anyway, I look at other people doing videos, and I wish that they would tell us their pedigree at the beginning of their videos, just to know if this is somebody I should be listening to or not, right? That's the reason I started that on this video, just to say that I got 24 years trading experience utilizing technical analysis, and I'm an institutional trader, and I trade a significant amount of money on a daily basis. And, you know, just to help people who don't know anything about me, D7, Des, and just to say, oh, this is somebody that has some street cred, you know, maybe it's worth leaning into and listening and maybe subscribing. So anyway, hope you guys are well. Take care. We'll catch you later. Bye.